Now, look, if you're a borrower and you're thinking about borrowing some money, or importantly, you're thinking about investing into the property market, or you're thinking about maybe should I sell because the property market's about to fall apart because you keep getting fed a whole lot of negative news. Bad news, bad news, bad news. And by the way, bad news sells. If you're one of those people, or if you're just not sure which way this economy is going to go, and if there is going to be a V-shaped recovery or a W-shaped recovery or no recovery at all, then maybe, just maybe, you'll be interested in my conversation. This goes for about 15 to 20 minutes. My conversation with Peter Switzer. Now, Peter's a great economist. He's a great economics commentator, generally. He's a good financial planner. But he has a very, very good read, a tight read on the global economy and, in particular, Australia's economy. He talks to everyone. So if you want to hang out with me and Pete Switzer, come and listen to me talk about the economy, the potential for a V-shaped recovery, and what it looks like, why it looks this way, and how do you reconcile this with the share market and all the bad news. Well, I'm really happy to say I'm here with my good mate, Pete Switzer. Usually I'm on the other side of the microphone with Pete. He's usually interviewing me, and I'm not actually going to do an interview with Pete. Pete's an economist. He's a good mate of mine. He's someone I respect highly. And we're going to just have a mag about what's going on out there in the economy. First thing I want to talk to Pete about is he's a good share market analyst. He understands the value of stocks. Right now I see a dysfunction between what's going on in the share market from its lows to where it is now. Some stocks are just steaming ahead, mate. Steaming ahead, way ahead. Yeah. How does that sort of fit into what the predictions are about the economy and also the so-called mixed messages out there? What do you reckon?
There's multiple answers I can give you on this, Mark, but I think there's two major ones worth considering to explain why this market's bounced back. And with my Switzer report, I actually have been saying that it's likely we're going to bounce back. I'm not quite sure if there'll be another leg down. It'll depend on another curveball. This came from a curveball called coronavirus, right? And when it came along and government said, we're going to close down economies and lock people up, well, people thought, this has never happened before in our lifetime. And so what happened was the stock market just sold off on uncertainty. No one could work out what was going to happen to the various companies. Remember, all share prices are a function of what are the profits in the future. You close down an economy, you lock up consumers and businesses and whatever, what can you expect? So that drop, America us 38%, America about 35%, stock market down. That was not knowing what was going on.
Is that highs to lows? 30
exactly.
40%.
Yeah, that's right. And then the market was shocked by what governments and reserve central banks decided to do. Throw an enormous amount of ammunition to try and rescue the economies. And they knew they had to do it because they'd never closed down economies before. They didn't close it down with the GFC. They didn't even close it down with the Spanish flu. So this is the first time they'd really done something like this that could even be, we heard hibernation for 6 months or something like that. So, but that firepower, Mark, and I've been watching, my media career started in 85. I was lecturing economics at University of New South Wales. And I started writing for the Telegraph around 85.
I remember it.
But in 87, the crash of 87, gave me my job with Doug Mulray on Triple M. And I started getting into the electronic media, then Clive Robertson on Newsworld and all that sort of stuff. And the rest is history. But all those times, 87 crash, businesses weren't closed down. This was an unusual situation. And governments historically were unbelievably slow to come up with a rescue program. A lot of the times I said, well, it's a private sector thing. Let them sort it out. When unemployment got too big, that's when governments started to get involved. And even with the GFC in America, they didn't start throwing firepower at the problem there until after the election when Obama got elected, knocked Bush off. It wasn't until about January or February that a real rescue program got in place. And of course, the stock market rebounded out of that from March 2009. I think it went up about 50% that year. So it's that rescue muscle that's been thrown that explained the first leg up.
The first leg up, so from the lows though, what did the first leg up do? So it gave a 10% increase? Or what?
No. It was actually quite surprising. America actually rebounded out of bear market territory, which now there's an interesting story behind this. The main reason they did that, because we went to we were down about 38, then we were down about 23-25% for the last few weeks. We've improved. We're out of bear market territory now, but America's stock market, the S&P 500, is driven by some of the biggest and best companies in the world, and we use them on a daily basis. They're the FANG stocks: Facebook, Apple, Amazon, Netflix, and Google. Who doesn't wake up in the morning and go to Google? You know, and Netflix, when you're home at night, you're turning on Netflix. So those companies are so big and massive, they've actually driven the S&P 500 up faster than any other index in the world. If you took them out of the US one, you'd probably find they've only rebounded to the same extent as us, because the other companies are more like our companies, normal kinds of companies, bigger, but still in terms of the relative size of the market.
And when you talk about the index, what you're talking about, Peter, here is when you add up all the market capitalizations, the increase in market capitalization of all the listed stocks in the US.
Yeah.
And what happens is, because those companies you're talking about are so big relative to everybody else, they drag everyone else along with them.
Exactly right. Yeah. So we're talking about the S&P 500, the top 500 listed companies in America, but those ones are so big. Like Amazon is unbelievably big.
It's nearly $1 trillion.
Yeah.
Yep.
Exactly. And so the consequence of that is that they have, and that, by the way, their share price are above their January starting price. So they've gone down a little bit for a short time, but they've instantly rebounded, because all the people who were locked up were using Netflix. They were doing Facebook all the time. They were always doing well during the
Well, then how the hell do you reconcile all that with all the bad news we keep hearing about the demise?
But that's only good for them.
Right.
All right. Now, until this week, Australian banks, these are, and you know banks very well, Mark, but these are still for the best banks in the world. Whether the Haine Royal Commission said they're a bunch of scumbags or what, it didn't matter.
They perform the best.
And on the international tests during the GFC, they were in the top 10 banks of the world before. I think the last one I saw, in the top 50, they were in the top 50, probably in the 30s or something like that. But they're very good banks. Now, that's
in terms of profitability and rating, how they're rated internationally.
Yeah. And the quality of their balance sheet. Because who wants to invest in a bank that disappears? A lot of American banks can disappear because they're so small in the balance sheet.
And there are 10,000 banks in America.
Yeah, exactly right. And so what was, I think, a symbolic problem for our market was the fact that our greatest companies, whether you like it or not, the banks, were really struggling. Now, it's partly understood. The government recruited them to help out. So they're deferring loans and they're giving businesses loans at lower rates and all that sort of stuff. So they've risked themselves for the sake of the country. Therefore, the share price wasn't down. But you know what? I don't know if you've noticed this. This week,
I have watched it.
NAB's share price is up 23%.
ANZ's up some ridiculous number too.
Well, they're all 17% today. I actually worked it before I came this morning. 7. NAB's up another 6. 23% in 1 week. Now, what was the only news item that was a bit of a reference to maybe how bad this problem of a coronavirus is? The big one, JobKeeper. We were supposed to have 6 million on JobKeeper. Now we find there's only...
I can't believe this, though. I mean, I can't believe that one bit of news, there's only 5 million or whatever the number is. Yeah. It's a lot less anyway. Half the amount of money the government's going to spend on JobKeeper is now available not to be borrowed.
But Marcus, you know what's a reference to? All right, it could be a reference to how stupid Australians they can't fill a form in. But I don't think that's the case at all. I think the fact is you can't get JobKeeper for your employees unless your revenue is down 30% or more, right?
I know. Good example, Yellow Brick Road. We can't get it.
Yeah.
We don't have the 30% reduction in revenue.
Exactly right. And so therefore, there's a lot of businesses that haven't been as badly affected as was presumed the case.
Yeah.
When someone said, because that 6 million figure was a guess. They would have looked at the first few weeks of forms being filled and sent to the ATO, and they would have been the most desperate. But other ones and then some companies did well in March, but they knew they were going to be really crappy in April. So they had to prove to the ATO that they were going to be affected badly by this. So there's a whole lot of processes in there as well. But Mark, the very fact that our economy is not as badly affected as possible has been a trigger. And I actually wrote it on Monday. I wrote the story about JobKeeper because I actually interviewed Josh on Friday at 3 o'clock when the news came out. And I had read the press release and he was a bit surprised I didn't hear it. I said, well, I've been preparing for this interview, mate. That's why I haven't heard it. So I didn't actually talk about it because my interview's not going to go out to the Wednesday after. So over the weekend, I looked in to see what in the hell had gone on here. So I wrote it up on Monday and my last line was, if this is a sign that the economy is not as bad as we expected, bank share prices should
Well, not
slow.
as bad as the government expected.
Yeah, that's right.
And we didn't. I mean,
The economists believe it. They went on. It was like that Bob Dylan song in that great song Hurricane. The media, they all went along for the ride.
well, if it's not as bad as the government expected, and therefore we feel a bit relieved, are you now saying is we're going to have a V-shaped recovery?
I thought we've already seen a V-shape on the stock market.
Yeah, that's what I'm trying. I'm trying to reconcile the two. Though
I think, Mark, it's going to be. I hate to quote a good mate of ours, Chris Joy. He's pioneered the idea of a V-shaped recovery. So first one up, a bounce, and then it takes a while to go to the next level. I think that makes a lot of sense. I think.
Does he say back up to the top of from where it
Oh
stopped?
yeah, but you don't put a date on it because you don't know how long it will take. But
I've seen Chris's modelling. I've seen the analysis as he did. It's very technical, as you would expect from Chris's environment.
He does that so no one can understand him.
Yeah. And then he'll go and talk to you so that we don't understand. But the
sure.
point is, he does know.
Yeah.
And if you're investing with him, usually you do pretty well if you go through these periods. So what do you think? What do you think it is?
So look, remember this. The IMF, who people like you think are great forecasters, but like all economists, they get it right, they get it wrong. When they first saw this, and the Reserve Bank agreed with them, they thought Australia would contract by about 6.7% this year, and then rebound.
Explain what you mean by that contract GDP.
All right, so the GDP is the valuation of all goods and services produced in the country. So imagine if we, just for simplicity, it was $100. So it was the value of all production. It's called $100 billion, if you like. If the next year it ends up being $102 billion, well, we've grown the economy by 2%. Hey, how easy is that? But most people don't understand that. Okay, so the Reserve Bank and IMF said, well, if it's 100, it's going to drop down to 94. Drops by 6 billion. 6 billion over 100 is 6% fall. But they then thought 2021 would be a rebound year of 6% as well. So therefore, there's always been an expectation that because this was such a sudden collapse of the economy and the stock market, there would be a sudden rebound as well.
Yep.
And that, now, when the government started talking about 6 months hibernation and Italy was devastated, the numbers got pushed up to a 10% contraction of the economy, unemployment going to 10%. That was the worst case scenario. And that's why the stock market was really sold off. Mark, I think, the smarties behind fund managers are doing their numbers and saying, well, that 10% number we'll factor into our models is now too much. We better pull it back. And when you do that, you start looking at companies' potential profits and say, well, their profit was going to be shit, excuse the French.
Yeah.
On a 10% contraction, but on a 6% contraction or a 7% contraction, their profits will be better. We better buy this company. We've oversold. And that's what we're seeing. People, smarties, doing their numbers. Now, by the way, it's not just smarties. A lot of normal investors, long-term investors, learnt from the GFC, Mark. CBA got down to $27. It was $60 before the GFC. It went down to $27. Whenever I was interviewed during the GFC period, I'd say, look, stock markets rebound by 30 to 80% the first year after a crash. And then the people on radio or TV would say to me, well, what would you buy? Well, I just play it safe. I said, buy the banks because they're such solid companies. If you bought the CBA at $27 before the crash, your yield, your dividend return was
relative to the price.
Was over 17%.
Which is an unbelievable return.
Term deposits 1.5%.
I was going to say when you compare to what you get if you put your money in the same bank just on deposit.
Exactly right.
As opposed to buying the stock.
Exactly.
So, okay, but what do you think? Okay, what is Chris calling?
Okay, we're rebounding out, and it's a nice rebound. It will then take a while to, because by the way, there'll be some companies who say, all these people went home. I don't know if I need them all to be in the office. So landlords will get a bit of challenge by people trying to reduce the size of their office. Then there'll be some businesses who say, all these guys who are on and girls who are on $300,000 a year, well, things are a bit tougher now. Let's knock them down to $250,000. So there's going to be a reduction in salaries. Yep. And therefore that will knock down the enthusiasm for them to pay high prices at auction. So there's going to be that adjustment process, Mark. And I found over time that even when the economy rebounds quickly, unemployment is a really slow lag improver. So it might take some time and therefore confidence to be affected. So all that boom mentality, And you employ people. You know, sometimes when you have to get a person, you have to pay extraordinary amounts to get them. Well, you won't have to pay those extraordinary amounts. And that's
well, can I ask this, Pete? Okay, Pete, do you see going forward? We've been sort of bobbling along 5.1. You know, Reserve Bank would like to see 4.6, but 5.1% unemployed. Let's not talk about participation rates. Underemployed for a moment, because most people don't know what we're talking about. Yeah. Do you see a reset around 6% for a long period of time?
Yeah, I think we could go as high as 7 or 8. Because the numbers we'll be reading will be numbers for May and June, which are still going to be crappy. But once you get into July, the September quarter, things will start to improve. Now, I'll throw another thing at the same time. There's a guy called Michael Knox, who's the chief economist at Morgan's. And Michael is a very smart guy. And he watches a lot of American economists. And he always sees a guy called Kevin Hassett, who used to run the Congressional Budget Office, basically did the numbers for the White House. He now is actually advising Trump as chief economic advisor. And he reckons the CBO, this Congressional Budget Office, is the best predictor in America. They're predicting that the US will have a rapid growth out of this late June into the September quarter. And there's a guy called Scott Wren, who's head of equity strategy for Wells Fargo Bank, interviewed on CNBC this week. He reckons America is going to be out of their recession by the end of June. Now, I'm an optimist, you know that. They even knocked me out. So that means that they believe there's going to be an enormous rebound as people go back to work, they start going back to bowling alleys and stuff like that. That quite staggers me. Even if they're a little bit exaggerated, I think the September quarter here and in America will be much better than expected. And December's going to be great.
What about the expectation of governments spending money? And before I go, our government's spending a lot of money, as we know, and it's not the 130 billion now, it's 65 billion or some other number because of the error in terms of what the ATO was gathering. But irrespective of that, it's a lot of money. Do you think that this country still needs the government to keep on JobKeeper? If I'm the Prime Minister, I'm Scott Morrison, or I'm Josh Frydenberg right now, what would you tell me to do in relation to JobKeeper?
Well, they've actually got in train a June review of JobKeeper. They've been trying to do their own independent analysis of what's going on, but I think they may well also put it on business owners. Okay, you told us you weren't going to do well. What is your position now? If you still think you're well behind in terms of revenue and you're entitled to get JobKeeper, reapply.
Right.
That would be, and I think some businesses, like for example, if I got a cafe in the CBD and by end of June, everyone's back in the CBD, well then you wouldn't have any reason to ask for JobKeeper.
How would you
apart from paying catch up from all the losses? How
will you defeat then the what I hear out in the streets? How will you defeat it? I'm not suggesting
you deal with it.
Yeah. Well, at least balance it up. Yeah. Come September, everyone's got to start paying their mortgage back because the hardship relief is finished. Yeah. JobKeeper probably going to be done. Yeah. It may not be extended.
Unless you're in the travel industry. Correct. Those sort of special workers
there'll be some special pays. Job seeker may well come back down to the number it was prior to the doubling.
Yeah, it has to, because some casuals won't go back to work because of
landlords are going to expect rent.
Yep.
What do we say then about economy at that point? I mean,
we won't go back to where we were before. There's no way, because the economy won't be growing as fast. Well, it will be growing as fast, but it's catching up. So if you average it over the 2 years, if it's 6% down and 6% up, it's really zero over 2 years, isn't it? On that average.
So do you reckon 2 quarters of negative growth? Really. 2 quarters of negative growth?
Yeah, I think the
technical recession.
Technical recession.
So 2021 is starting to look okay.
Yeah, but certain sectors will be struggling, and you're right, Mark. There'll be battles with landlords. There'll be people trying to make up for their home loans. But remember this, a lot of our home loan interest rates are unbelievably low. You and I can remember 17% home loans.
I was paying it, don't worry.
Yeah, that's right. And so I think, look, the adjustment process will mean that we won't get back to a normal kind of economy until probably 2022.
But that doesn't mean it's a disaster.
No.
That's what you're saying.
That's right.
It won't be a disaster.
No. And some businesses and some sectors will be doing fantastically well.
And that's how you reconcile, because you're saying the fund managers and all the smarties, the analysts, the people who actually sit and do the work on it and put data behind and do the mathematics around it, they're saying this won't be as bad as we think. Therefore, it's time to get back into the market. They don't really know exactly what time to get back in the market. They're saying these stocks present value. Yeah. Certain stocks present value. Let's get back in the market. They all come to the same conclusion pretty much at the same time. Yeah. That builds momentum, and by definition, they have to have the stocks in their portfolio, so it just builds the stock price up. It's not a fundamental thing. They're not saying
the prices could be too high now.
100%, but it's more momentum driven to some extent. They've got to have it in the portfolio. They've got to have some ANZ, some NAB, and some BHP and some Rio, blah blah. But so if you're a small business person, is the best way to look at this is it to say to yourself and to whoever you're talking to, what sector am I in? This is going to be more sector-driven decision-making as opposed to saying, let's look at the whole economy. Because you're saying, and I think I agree with you, the whole economy will be okay. Whether it's 1 January or the end of December, I don't know, beginning of December, it doesn't matter. It's going to be around that period. But sector by sector, is that where the small business owners should be assessing?
That's right, exactly right. And by the way, even within the sectors, Mark, some small business owners, like for example, if you've got a cafe in CBD Sydney, you've been chaos. Everyone's gone. But they've gone to the cafes in the suburbs, and those cafes in the suburbs have been doing really well.
So what do you want them to focus on? What are you going to tell them? What the cafes in the city, tourist venues in southeast Queensland, tourist venues here in Sydney, what would you say to them? What do you want them to focus on?
Yeah, it's a good question, Mark. I think the argument always is when you're in business, you've got to play the game that's in front of you, not the game that you thought that would be in front of you.
Yep.
Now, clearly, they're going to pull back their staff as a consequence. I think, for example, I don't know of one cafe in Sydney that actually has a sign on their window which says, "We deliver sandwiches to your shop." Now, some do it, but some don't advertise. They don't actually get proactive. And like, for example, if, for example, there's only 3/4 of offices or businesses back by the time end of June, if that's the case, you've got to try and get more out of those customers that are in front of you. In the area of restaurants, Mark, in an area we know like Bistro Moncur, that they now are doing takeaway. But I've often thought, why doesn't a top-notch restaurant actually not only deliver the food to the home, but deliver a waiter as well? There are a lot of wealthy people, like you. I know you're a bit tight with the money, aren't you? You're well a bit tight. But
I'd rather cook myself, but you're right. No, you're right.
No, but we've got friends who are very wealthy who would spend a lot of money to have a waiter in their home on a Saturday night serving them and their friends. But I don't know any cafe who's actually thought outside the square and done something like that. There may well be out there, but they're not marketing it. We don't know about it. And I think the greatest person I interviewed, apart from you, Mark, and you are fantastic, one of my all-time favourite people to interview, and I know because the numbers show on my website when I interview you, was Edward de Bono. And Edward de Bono was famous for that term, thinking outside the square. I interviewed him twice on Talking Business when I did that for 10 years. And when you're an interviewer, Mark, and I think you've been in this situation as I have, there's nothing more disconcerting or worrying when you're asking great questions and you're not understanding the answers. You can do that with Chris Joy. Ask me a question. What are you talking about, Chris? But Edward de Bono was explained to me that the businesses that do well when they're really under challenge are the ones who think outside the square. But he was doing it in a very technical kind of way, and I realised that the audience on the plane listening might not understand it. So I said to him, "Can you give us an example of what you mean?" And he said, "Peter," he said, "imagine two," and I bet you've heard the story before, but he told this to me live. He said, two young boys walking in the forest without any shoes on, and they encounter a grizzly bear, and they both start to panic. But one kid in his panic goes to his satchel, starts putting on his running shoes. And the other kid looks at him and says, "What are you doing, you idiot? Even with running shoes, you'll never outrun a grizzly bear." And to that, the other kid replied, "I don't have to outrun the grizzly bear. I only have to outrun you."
Yeah.
And I think, Mark, you know it.
I've told the story about, but mine's not about it's a tiger. But and I think
it's a competitive advantage, isn't it? That's what we're talking about.
Be smart. Yeah. Think of something different. And I think what you're trying to say here is innovate and get off your tush and do something about it and advertise and tell people about it. And don't be sitting there idle, because one thing is for sure, that bear will get you if you just stand there in your tracks. Yeah. You're gone, dead man walking, or woman. So make sure you do something about it. You know what's really interesting here, Peter, is that you've always been a goer. You and Maureen. That's, for those who don't know, Maureen's Pete's wife.
She's the brains behind the operation.
She's the brains behind the operation.
Top
He's
university
the beauty
in law.
she's a great woman, but she's been there every minute of and every step of the way in terms of the producing all Pete's shows and a lot of his stuff he's been doing and a lot of the innovations. But the two of you never stand still. No matter what confronts you. And like journalism, by the way, and being an economist and a commentator.
And financial planning as
and,
well.
And planning, they're difficult environments. Yeah. I'm in some of those environments that they change all the time, and things happen outside of your control.
Especially when you do financial planning the honest way, Mark. That can make it really
100%.
challenging as well.
And what happens, you have to work out a way to survive. Yeah. And Pete and Moran have always managed to do that, which is one of the reasons I got him on here, because that's the question I really wanted from you. I wanted to have the economic discussion with you, and I'm sort of in agreement with all those things you say. You know, we'll soon see whether either one of us are right or wrong, or everyone else is right and we're wrong. The economy's going to be okay. Yeah. We're going to be okay.
It'll creep back to goodness.
It'll come back okay, by hook or by crook. And the second thing is, you got to hang out with people who can help you out. And if you want to hang out, the best way, the quickest way, the most efficient way, and the cheapest way today is just by listening to people online. I'm going to thank my good mate Peter Switzer for coming in. Like, he's not only a great economist and a great economic commentator just generally, he's good on small business, he's a great financial planning guy, but he's entertaining. He's got plenty of energy. He says it as it is, and what he does, he summarises everything he reads and puts it into nice, simple sentences for you. So if you want to hang out with mentors, come listen to Pete, come listen to me, watch us both. We'd be happy to have you. See you guys. Thanks, Pete.
Mark, great to be with you, and it's good to talk to someone who's a Roosters supporter as well.
Go the Roosters.